Oh, Donald Trump just shocked markets by actually potentially releasing the tariffs that just yesterday mainstream media was saying, Trump doesn't have a plan, the tariffs aren't coming, it was just a negotiation strategy. And frankly, everybody on Wall Street was saying this. Wall Street was actually rallying today on the belief that the tariff deadline's gonna come and go, they'll delay it to March, was a rumor this morning. Well, White House press secretary just poured cold water on all of that. Holy smokes, listen to what is coming down the pike. Here we go, let's listen to it right now.
Friends at Reuters are reporting that the president has made a decision on the Canada and Mexico tariffs, but that they won't actually be implemented until March 1st. I was wondering if you could confirm that and talk through some of the president's thinking.
I saw that report and it is false. I was just with the president in the Oval Office, and I can confirm that tomorrow, the February 1st deadline that President Trump put into place at a statement several weeks ago continues. The president will be implementing tomorrow a 25% tariffs on Mexico, 25% tariffs on Canada, and a 10% tariff on China for the illegal fentanyl that they have sourced and allowed to distribute into our country, which has killed tens of millions of Americans. These are promises made and promises kept by the president.
The president yesterday said that last night he was planning to discuss whether an exemption would be made on oil imports. Do you have any information on what decision he made there, or will there be exemptions at all offered under those?
I don't have an update or readout for you on the exemptions, but those tariffs will be for public consumption in about 24 hours tomorrow, so you can read them then.
Okay, we gotta break down the impact of this, and we're gonna calculate the impact of it together right now. Quick reminder, today is coupon code expiration day. Big price increase. Remember, you get lifetime access to the Meet Kevin Alpha Report and all the course member live streams and trading alerts if you join over at meetkevin.com. Okay, let's break this down on the iPad here and break down what do we actually think this means. Well, first of all, as of 2023, Mexico, Canada, and China accounted for various levels of trade as a percentage of our GDP. And it's important to look at this so we can actually value how much of an impact on ultimately our GDP this could end up having. So if I go to Mexico, I got 3.2% as of 2023 of our GDP comes from this trade. We've got 3.3% Canada and 2.1% China. Okay, so what do we end up having here? Well, let's go put weights on this. 25%, 25%, and 10%. So we're just gonna do a very, very simple weighted average formula here. And let's see the impact that we could actually be expecting here on GDP. Now, keep in mind, it's not just the impact of this, which isn't necessarily so huge from the point of view of the entire economy. It's how it all ends up adding up and affecting total growth, right? So this was the percentage of GDP. So originally, the percentage of GDP in total would be, what is that, about 8.6% if I just mentally total that up together. And then over here, this would be the weighted average sort of sum impact. So let's add these together here. We're just gonna go add. There we go on the iPad. Okay, so we're shaving off about a total here of about 1.8%, which isn't great. It gives you kind of a weighted average of what is that, about 20, a little over 20% of the total impact that we have from this trade here. This works out to about $2.3 trillion, mind you. So if we figure $2.3 trillion is now all of a sudden going to get reduced by a total of, let's run the calculation here. This will be, we're gonna divide this percentage by this percentage here. Let's actually make this a percentage. And there we go. It's about 21% is about the weighted average here, given that China has a little bit of a smaller percentage of trade as a percentage of GDP. We trade more with Mexico and Canada, our larger trading partners. This reduces this by about 21%. So $2.3 trillion reduced by 21% brings us down about $500 billion. This is about a $500 billion cost to GDP. Now, there could be upsides in the long term, more potential income or tax revenue, external revenue service for the United States. But if Donald Trump ends up announcing this external revenue service tomorrow, it is going to be seen as a potential $500 billion hit to GDP. So you kind of have to look at this and go, oh, but SoftBank says they're going to do $500 billion into AI infrastructure investments with Oracle and otherwise. Well, basically, that entire project, which is planned over 5 years, gets killed in the span of 1 year. So that makes the impact a little bit more noticeable. In addition to that, you really have to divide the 500 by about GDP. And if we divide GDP or 500 into GDP, it'll give you about 2.1%. Okay, why does that matter? Well, because our GDP growth rate is about 2%. So it's possible that $500 billion as a reduction to our GDP could actually be enough, assuming all of that $500 billion is somehow a loss, right? Again, we're collecting that as a revenue. So we're assuming that trade is reduced by at least that amount, but we're still receiving that as revenue. It's possible, though, that that trade could be offset substantially more. And could lead to a weaker economy. But the point is, when we compare the size of the tariffs that are potentially being announced here to our GDP, they subtract about 2.1% to growth. So let's understand this a little bit differently, because I know that that is a little bit complicated. But just think about it this way. If it correlated directly, that GDP grows 2%, and you just minus 2.1%, no surprise that the market is all of a sudden selling off on the fear of these tariffs. Now, it's not devastating, but it's definitely a hit. I'll show you that really quickly. I wouldn't be surprised if we get a rebound, but we actually broke out this morning above my trading range here on the Qs, which I sent out on the Meet Kevin Alpha report. We were sitting over the 105,000 line for a while here. We've been range bound since the election on Bitcoin. And even Tesla was breaking out above the 414 level, and now it broke down below it, all after these tariffs were announced. So clearly the market is starting to try to price in the GDP impact of this, but it is very, very difficult to do. So let's try to simplify it here. I also want to be clear, because I know there was a little bit of confusion. Two quick things I want to say. On the Alpha report, and then I want to talk about the GDP impact. The Alpha report's that free report that is still going on for the rest of this month, totally for free. When I launched it originally, I said there were no plans to monetize it, and that we expect at some point in the future we might. But it's free until at least the end of November. I pushed that to the end of December. I pushed that to the end of January. And now I pushed it to the end of February. So in other words, I've been providing it for free for longer. And you can still get 30 days of it for free. Just go to meetkevin.com. It's all the way at the bottom. But I did notice that there were a few comments from people like, what? You said you were never going to monetize it. No, I never said that. In fact, we said it would be free for the foreseeable future, and we don't have any plans at this point. So I just want to be clear about that. It was never meant to sort of be a rug pull or anything. It's actually something that takes a lot of work every morning, and something that's supposed to be, hey, we're providing you more value. And at some point, whether we monetize it through an app or the courses or whatever, at some point it'll get incorporated into something else. We didn't know at that point what that is. Now it's just being included in the courses. So if you're already a Stocks and Psych member or Trumponomics member, it's free. It's totally included. So I don't know how that got misconstrued by a very few number of people, but I thought I would mention it just to clean that up. And you can go back and look at the original videos at the end of November to verify that. 2.1% is sort of the weight on GDP, right? That's the negative. Now, the positive, I would say this is the max negative if all 500 bill, disappears, basically. The positive, that's not necessarily the max negative. That's the negative if it all disappears. But there could also be other aspects here. What happens if, because of the tariffs, businesses can't operate anymore in trade, and you have layoffs, shock to infrastructure, shock to supply chains, and hiring, etc. Well, in this case, you could actually see a greater. Actual impact could be bigger. So we can't really say that 2.1% is the max impact. However, And it's actually interesting. Canada, I just saw it this morning at like 6 a.m. Canada was running ads on CNBC about how great of a trading partner we are. And thank you, America, for being a great trading partner to Canada. And Canada will always be here for you, your northern buddy. And I thought it was like, oh, this is interesting coming. Like, it's almost like trying to brainwash the population before the Trump tariffs come. But anyway, this is, obviously Trump trying to maintain his promise here. The positive, obviously, is that the U.S. would collect that 500 bill in theory, unless, of course, you have this substantial reduction in actual trade, because now you get counter tariffs. So downsides are counter tariff balance, BK, bankruptcy, or collapse of certain businesses. And then, of course, you have the inflationary impact, inflationary risk. I think that's lower because I think companies have less pricing power. But theoretically, that money should go to the U.S. government. Okay, cool. So now the U.S. government has $500 billion. What do they do with that? Well, if they reinvest it into America, then maybe you can get some of that GDP impact back. If they use it to pay off the debt, well, that's good, but you don't necessarily get that money back. Now, if they give it back in the form of, hey, we're doing these tariffs and now we're going to give tax breaks. Yes, in theory, in the longer run, we will be better off, hopefully. Usually tariffs create a deadweight loss from an economic point of view. But the theory is, if it goes to lower taxation, great, but that'll take 1 year, right? So if the tariffs go into effect, as they said, Feb 1, then you get the pain now. So this is one of the problems that in the market that we're in right now. The pain immediacy, or the immediacy of the pain. So deportations, tariffs, job cuts, and layoffs, those things cause economic pain immediately. That is Q1 pain. The upside would actually probably not come until after you pass a tax plan, which maybe it'll happen in Q2, and then it'll be effective Q3, Q4. So the upside probably of tariffs would be Q3 earliest, right? Because you have to collect, reinvest, tax less. So you do create a potential Q1, Q2 hole. And so I think that's what markets are reacting to. Now, ultimately, do I think there's a chance that a lot of this is still negotiation and markets will digest this and be like, all right, this isn't a big deal. Like, fine, we'll have the tariffs. It's going to hurt manufacturing. It's going to hurt GM. It's going to hurt, Canada, Canadian manufacturers, U.S. manufacturers in Canada, GM, Ford, whatever. I'm sure their stocks aren't very happy right now. Look, Ford did fall, but the stock's only at $10. It did rotate down though after the announcement. General Motors, same thing. You got a little bit of a rotation down, but they're not heavily down. Probably because markets had already been anticipating some of this was coming. But that said, you can actually see it directly here. Here is the report that the tariffs won't go into effect, or maybe get delayed until March. Here is the report that, no, they're happening tomorrow. You can see how the news cycle is directly, you can kind of see that here too, directly impacting trading today. So it's something to pay attention to, and we'll be incorporating this, of course, as well into our course member live streams, trading alerts starting on Monday. Get in before the price goes up. And then, of course, the Alpha Report, which, again, is still free for the next month, and you can get that over at mekevin.com. So with that said, thank you so very much for being here. There's a quick little update on what just happened in the market and some of the impact of how big this actually is. Remember, you're basically taking that whole SoftBank investment over 5 years and taking it away in 1 year for the potential hope that the tariffs are going to help on the upside, but then also the risk that we get counter tariffs, and those counter tariffs could literally undo everything that we're collecting and more. Because usually, from an economic point of view, you're not going to find an economist that tells you tariffs are a growth tool. Now, of course, they've been used like that in the past, but you're not going to generally find an economist that says that. And then keep in mind that there are externalities, bankruptcies, layoffs, counter tariffs. Those things hurt before we see the benefits. So, yes, tariffs increase risk. But we'll see. And with the market right now that thinks Trump has mostly been sort of signaling or messaging regarding tariffs and not actually willing to push the tariff button, this is a little bit of a wake-up call. Now, in fairness, he might not have the full plan together yet, kind of, I feel like, do things a little last minute, and they're like, this is the plan. Fine. I mean, they end up getting a lot done, right? What the impacts of it will be, though, will be studied for a while. They will not immediately be clear, which increases uncertainty, which I suspect will increase volatility in markets. You should be seeing the VIX spike. Well, yeah, of course you are. I mean, basic. Yeah, Finance 101. Thank you so much for being here, folks. Look, I love y'all. I'm going to keep trying to provide value every single day, and we'll see y'all soon. Thanks. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.